How's it going, everyone? Welcome back to another episode of the Shawn and Matt Show. My name is Matt. That is Shawn, and welcome to our show. Shawn, in today's episode, the Fed has cut interest rates, and we have brought in an expert to tell us what exactly that means. So please welcome to the program, Rich Conlon with Atlantic Coast Mortgage. Rich, let's get into it right now. My question to you is, can you just explain this in basic English in under like 1 minute what this actually means?
Yes, absolutely. So, quite frankly, it's a recalibration of interest rates. The Fed is now in sync with the bond market. And so, in terms of what happened in interest rates, the 50 basis rate cut, it did not just immediately drop the consumer rate by 50 basis points yesterday. This was priced into the market, right? So, for those that were expecting their rate that they saw on Monday to drop 50 bit, a 0.5% yesterday, that's just not the case. It was already priced in. So overall, though, the trend is towards lower rates, which is very exciting for all consumers and buyers.
Yeah, I think I saw that interest rates actually went up after the news hit that rates were cut by the Fed. Now, my question to you is, I see agents and lenders post on social media that the Fed has cut interest rates with no other context. It's just like sharing the CNBC article. And what I'm thinking, if I'm a consumer, potential buyer or seller, is what do I do with this information? What's next?
The big thing that I'm pressing upon people is that we are heading in the right direction, and that if you have been considering purchasing about buying, that you should start now, sooner rather than later. Because the outlook is for this year, they plan to cut it at least another 0.5 to 0.75%.
Is that the Fed rate or the mortgage?
The Fed rate. So the key thing when it's Fed, there's the Fed rate and then there's the consumer rate. They are somewhat symbiotic, but it's not a percentage point per percentage point, right?
And so the fact that you kind of know that the Fed is going to do this in the future, are these already baked in now? I mean, because what's the rate today? I mean, on a 30-year fixed conventional financing, good A-paper stuff.
So obviously we had a lot of inquiries yesterday. Yeah. And so it was definitely up late and then back at it again this morning. We were showing rates with a 5 in front of it.
Wow.
Which was awesome, right?
Yeah.
It's very exciting and encouraging for many because everyone was thinking, is getting tired of the 7s or even now 6s, but now we're talking in the 5s. So it could be low 6s depending on obviously some variable factors, but we are seeing rates with the 5.
And the fact that the Fed is announcing or saying that they might cut rates maybe in December or something like that, when does that start getting baked in?
So there's 2 meetings left, right?
Okay.
There's a meeting in November, which they typically have in the very first couple of days of November, but with the election, they actually bumped it back to the 6th and 7th, so right after. So there's a meeting in November and there's a meeting in December. So there's 2 meetings left, right? And they indicated that they want at least 0.5 to 0.75 of another rate cut by the end of this year. The statistics that they came out with yesterday, there is a 68% chance that they will drop it 0.25% in November and a 32% chance that they'll drop it 50 basis points at the November meeting.
So I have a 2-part question. You're saying that they're meeting again. Was the September meeting like an emergency meeting?
It was not an emergency meeting, but what was interesting about the September meeting, and it was why it became such a foregone conclusion that it was going to result in what it did, was quite frankly, they should have and talked about and really considered actually instituting the first rate cut back in the July meeting. And so the September meeting, they wanted to make sure that they did do it somewhat aggressively, not too aggressively, but institute a significant rate cut so that they weren't going to push it all back into November. Right? Because doing 100 basis point rate cut right after the election, that would create, a huge stir. And they didn't want to get into that. They say they don't get into, the Fed doesn't, follow the election or get into politics. But
so back in July, everyone knew that come September, there was going to be a meeting and Fed rates were expected to be cut. But now all of a sudden it's like, wait, they're just doing it because there's an election in November. So it seems to me that like people in July were like, oh, I hope they cut it in September. Now that they're cutting it, they're just like, oh, wait, they're only doing it because of politics. What are your thoughts on that?
I honestly, I hold the Fed at their word that they don't make movements based on politics. I think there have been their data does support like the economic, the economy is improving. Now the jobs report, the weakening jobs report, that's something that kind of hinders it a little bit, but there has been actual supporting data to, help support their decision.
Would you say that in July, I mean, the numbers are a lot different from July where they said, oh, we're not going to do anything, to September now where they're going to? Was that inflation numbers came down, jobs report? What would influence
I would say
it?
predominantly is inflation.
Inflation.
That's the main driving force. And again, I don't know if you're familiar or if for those, Jeff Gunlock is a great person to kind of explain things in layman's terms.
And then does he analyze job reports and because Shawn and I are selling houses. And so analyzing job reports and inflation numbers and, employment, that's not something on the forefront. Sure, we take a look at that.
No, so he's in the, private capital investment, CEO, CFO, like is on all your major networks when the Fed meets, right? And he's usually on right after they conclude their meeting and will kind of give you a basic consumer breakdown of what they just said, right?
Mm-hmm.
And so his main thing was he expected, I think the Fed was also planning to cut rates in July and they didn't. So it just made September all the more likely. And that's why we saw that big rally. But inflation and some of the, the major economic reports really pushed September to just be, kind of a done deal.
Can I ask you a simple question? All right. Basis points, 50 basis points. Is it just 0.5%?
Yes.
Why do lenders say 50 basis points and not just say 0.5%?
I honestly, that's hilarious. I honestly say percentage, right? But
yeah.
I catch myself. Oh, I got to be, be the right lender, use the right terminology. But in layman's, it's percentage,
okay,
right?
Cool.
So I sent out to referral partners and then also to clients yesterday a quick video just to synopsis of what happened, and I caught myself. One part saying basis points, but then the other, I'm like, just say it how it means.
Yeah.
Percentage.
That's what people understand.
Right?
Because even me, when you're saying basis points, I'm like, wait, does that correlate to percentages? So the normal people out there won't get basis points. So just say percentage.
Yeah.
So getting back to potential home buyers out there that are maybe thinking about making a move, I was talking with an agent and he said he was pumped about the news because it means that rates are going to drop. And I don't know if he's seen like the historical rates. Rates have been dropping for a while. Okay, so the past year they've been dropping. So is this more of a sign to the public of the casual home buyer who maybe doesn't live in the interest rate graph to get into the market, or where do you see this kind of news hitting most home to?
I think you hit the nail on the head that this is a positive sign, an announcement, if you will, to the average consumer that does not follow this. To if you're a buyer, let's get in the market, but also more importantly, sellers, right? Inventory has always been an issue, right? And so as we start to see with these interest rates starting to drop, right, that buyer pool is going to grow quickly, but inventory doesn't always. So this should also help sellers that have been waiting and consider, just they love their rate, but at some point that house just doesn't meet those needs. So I would take this as a sign now to hopefully see a little bit of a rise in inventory.
Okay, and we know that rates, basically the rate has been baked in, right? Is what they say. But what actually happened yesterday as far as rates go? Because we were maybe at 6.1%, and then right after the news, did it actually drop a little bit for people, or did it kind of stay the same?
It didn't change.
It didn't change.
So,
I
got, probably upwards of 20 calls and then on top of 20 emails. And the calls that I was able to connect with, I'd probably say about 15 of them. It is sometimes difficult to explain that, but it was, hey, listen, this was priced in the market. Rates live in the futures, right?
Yeah.
So these past couple of weeks, when they're seeing numbers like this is with this anticipation, so that that day it doesn't just drop 4%. So rates were unchanged.
Yeah, and for those callers, the callers probably haven't been keeping up with the data, and then all of a sudden they're like, "Oh wow, the rates are low," but they've been low for a little while. So,
but what could drive now, right? What we're going to see over these weeks leading up to November, is what their concluding remarks are that they still plan to institute 0.5% to 0.75% by the end of this year. But what they also talked about was 2025. They're talking about a full percent through 2025. So we're talking about 1.5 to 1 3/4 of rate cuts from yesterday through the end of 2025.
You mentioned home sellers earlier. I just got an email from a client. We're putting their house on the market next week, and he said, "Hey, how is this rate cut gonna help us with our selling efforts?" What's your answer?
I'd say yes, absolutely. You're going to have now more buyers. You're going to have more. That's more competition, right? And what does competition do? Drives up price, drives up better contract offers. So yes,
and that's what we were hoping for. The fall market, we were planning and saying, hey, if we have these rate cuts, maybe we're going to see a spring market in the fall. And I put 3 listings on last week. They all sold. So shows you something.
So then you talk about prices rising. So you would say because of these rate cuts, everyone's talking about affordability, but what is that going to do to home price?
That's what I've been, that's one of the things I've been talking about with clients for the past year that have had this, I'd like to wait, right? Which I respect, right? And, but when rates do come down, how many other people do you think are in the same boat?
Yeah.
Right? A ton. And so now we just have this flood of new buyers that, again, it goes back to the inventory. The inventory, I wish, would fluctuate up and down with the rates, right? So that it would be, now that the rates drop and the inventory jumps up, so there's plenty of properties out there. That would be great. But that's just not reality.
Mm-hmm.
And so now, talking with clients, it's like, okay, now you're, instead of competing against 2 or 3, now that's 7, 8, 10. And what does that do? That's going to drive up the price, which is a lot of times you'll people are going to probably see it's going to offset that rate difference.
And you know what? Maybe that one saying date the rate, marry the house wasn't a bad idea on hindsight, right?
Yeah.
I mean, maybe it's not. You never know what's going to happen, but once you see that competition hit and the prices go up, your interest rate's lower, but now the prices are higher. It's like
Date the rate, marry the house. Still a horrible idea. But speaking of dating rates, what's going to happen with the refinance market with something like this?
Anyone that has purchased in the past 1 to 2 years are more than likely going to refinance. We are positioned for it. We fully expect it. Like yesterday, there were 10 clients that I talked about, not doing it yet, but starting the conversation and starting the game plan.
Really? People are going to refinance after 1 year living in a house?
Heck yeah, man. Think about it. Like I look at it all the time because I just bought a house in April and I'm like, man.
Are you ready to refinance?
Well, think about this. I think it was every percent saves, or every 0.5%, I can't remember, saves me $500 a month, right? So, I mean, you compound this with over the next year of 1%, another percent, it's going to save me $1,000 a month.
The key is really understanding, as a consumer, how much you're saving and what the costs are relative to that, the refinance costs. There is no such thing as a no-cost refinance. It's just because lenders typically are not going to do it for free. A title company, they're not going to do it for free. The county and state isn't going to let you do it for free. So there's cost, right? So it's understanding what those costs are relative to how much your savings to, then that's how you identify where your break even is. And if you're inside of 2 years and this home that you just moved in a year ago, why not? Right.
Yeah. I'll tell you an example though. My last house I bought, and within a couple of months I refinanced it, and I saved money. I was saving money, but Thad at the time was like, "Oh, okay, yeah, you could do it." But the thing is, I ended up selling that within 4 years, so it didn't make sense for me. Mm-hmm. So you always have to think, and life changes quickly, and you just never know when you're going to change. So sometimes those refinances don't make sense, but I think I'm going to be doing it soon. So
Shawn's going to refinance this house like 10 times.
Maybe.
The other thing, the other thing is with the economy, the past couple of years, a lot of consumers took on a lot of debt,
Yeah.
right? And so there are also clients that are looking at doing cash out refinances to help pay off that consolidated into a mortgage.
Yeah.
And yes, maybe the rate is higher than what they're currently at, but it could be a lesser monthly payment. We've seen scenarios where it is, instead of paying that mortgage and then all the other credit cards.
Yep.
So
let me ask you this: why do you think once we saw that announcement yesterday, and was it more than we were expecting? Were we expecting a quarter point and they went half a point, or what was it? Do you know?
So there was a drastic change 4 weeks ago. It was a quarter, and they were very cautious about a half. And then about a week and a half, 2 weeks ago, that pivoted to a half.
Yeah.
And so that's where really over the past week leading up to it, we saw a consistent each day, a slight improvement into interest rates because they were building that half. So they were expecting the half. Now, had it not come in, had they only cut it to 0.25%, we would have saw interest rates go up. Right. So that's why, with rates did not change yesterday from the morning to the afternoon, is because it met the expectations.
Yeah. And why do you think it's so funny? Because if you watch the stock market, right when it was announced, the stock market spiked, but then right after it just dropped. It dropped. It was actually negative yesterday. So actually today it's up 400 points. So maybe that news. But I was wondering, why do you think you would see that automatic drop when you would think it would just go nuts, right?
Well, with the concluding remarks, right, like the bond market and the investors, they analyze every word, every sentence of Powell's the statement, right? And there can be some knee-jerk reactions, especially when he was like, "Oh, we're gonna continue to cut rates this year," right? And so we kind of just saw this him and haw, and they want to be, they want to be aggressive, but they also want to be cautious, right? They don't want it to be, doing 100 basis rate cut and then find us that the economy's not quite there yet, and then we're playing this back and forth, right? Mm-hmm. So that, I think the message that they really wanted to get across was they're recalibrating the interest rates, and they're going to set us on a consistent path to lower interest rates over a period of time.
So I'm seeing a lot of posts on Facebook about people, talking about the rates, the rate cuts, and it seems like everyone's an expert on Facebook. I don't know where these people come from. Like, do you remember when that ship in Baltimore crashed into that bridge, and then everyone became like a ship expert? They were like, well, actually, the power didn't go out. And so everyone is now an expert on rate cuts. And what I'm seeing on Facebook, which is like the most comically worst place to get any sort of financial advice, is that people saying that, oh, they only decide to do this because we're in a recession, or because a recession is around the corner. So what are your thoughts and correlations with Fed rate cuts and a possible recession?
I don't like that word, but I mean, call it spade a spade. Is it possible? Yes. And I think had they not instituted the rate cut this time and then did like 100 basis, 100 or 1% rate cut, 100 basis points, 1% rate cut in November or December, I think that would put us in more jeopardy of potentially having that recession, because it's so drastic.
Yeah.
Right. And
it's a scary thing. Like, they're trying to save us. Why are they doing this?
Right. Instead of just kind of being cautiously optimistic with letting the economy continue still getting control. Inflation isn't under control. Yeah. But it's trending, right? And so you just kind of want to keep on the steady path, as opposed to just let's push the button, go full speed, and then we're playing reactionary type of moves.
Real quick, whenever people or lenders talk about interest rates, they're talking about the bond market. Mm-hmm. Can you explain how that works? Like, do you know like the ins and outs of that?
I'll be honest. Yeah. I'm not like, I don't get too into the weeds, but because quite honestly, this past year, that was the issue. That's where it was. A lot of lenders were getting confused, right? The bond market was doing one thing, but the Fed was doing it different, right? This meeting, what they are doing is now getting more in sync with the bond market. So the 2-year Treasury and the 10-year Treasury are a good indication of that. And so what I was listening this morning was like the 2-year, like the target is 350, 3.5. And so that, if you look at what he talked about yesterday, that's what their target is by the end of 2025.
3.5%.
3.5%
Interest
for the
Fed rate.
Yeah.
Speaking of 2025, if you want to look in your crystal ball, the number I'm seeing is like 5.5. I have no scientific research to back that up, but do you want to take a guess, or are you not in that game of guessing randomly at interest rates?
You know me. I grew up in sports. I like playing games. So, I don't like it when I'm talking with clients individually, right, about what they think. But I would guess 4.5%.
Ooh, nice.
Yeah.
All right. So you're not surprised if we see like a 4.87 type of interest rate next year?
That's what I was going to say, sub 5. Like he just said, we're seeing sub 6. I'm saying just sub 5. We're just going to break that 5 mark. I'm hopeful.
Yeah.
Remember when we predicted this with interest rate rises?
Yeah.
When we predict on this show, the opposite happens. So
that's funny you mentioned it. I got a call, one of the calls last night. I was like, I don't want to take this. It was a friend of ours that we've played golf with, his cousin. We made a wager at his cousin's bachelor party last April, and we were all having a great time. And the wager was the Fed not cutting rates or cutting rates in the next 18 months. So we set the date for October 1st. He said it wasn't happening. I said it was.
Ooh, you won.
So I sweat. It was a super sweat. And he called me and he goes, "Man, I thought I had it a couple of weeks ago." And then he goes,
"That's great."
So yeah, I like to bet on the market a little bit,
Why you're an expert? Because you're at bachelor parties betting on interest rates at a bachelor party. That's
some liquid courage behind it too, right? But yeah, no, I mean, it came down to the wire. You know, so but yeah, I'll set that. You can mark it 4.5.
Shawn, any other questions? I think Rich done a good job of broadly summarizing what's going to happen.
No, I think we went through them all. Let me look.
So, I mean, we talked about the perspective of buyers. We talked about the perspective of sellers, recession, refinancing, kind of just covering all the bases, no matter what sort of angle you're trying to play in this market.
Rich, when should I refinance? No, I'm just joking.
Well, Rich, why don't you give the people your contact information in case they do want to reach out to you? Where can they find you?
You can find me at Rich Conlon at AtlanticCoastMortgage.com, ACM.com. Cell number is best to reach me at 703-217-9004. But you can also find me on Instagram, Facebook, Instagram Rich Conlon Lending, and then the Conlon team on Facebook as well.
Bold man putting a cell phone out.
Hell yeah, man. We're going to get the calls.
Spamming.
Yes. All right, guys. That'll just about do it for another episode of the Shawn and Matt Show. For Shawn, Rich, and myself, thank you so much for watching. Until next time, we'll see you then. Take care.